Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, viewing the Australian dollar on a monthly outlook, you can see now we're heading quite close to the broad downtrend, which emanates back to around 2012. It is assessed from the level of 67.80 to 95, should put up a firm challenge from the bears and maybe see a rejection. Although this move has now taken out the level of 65.75, I am neutral. But I'm looking for this extension and see how the market plays out and whether or not it does recognize this level and stages a firm rejection and maybe posting a pullback to around the low 67 to 66 region. Looking to tomorrow, we do have the RBA interest rate decision, and it is widely expected that we'll keep rates on hold at 0.25%. With the US dollar weakening further from Friday into today, has now put further concerns to the euro. With the level crushed out in the dollar index at 98.30, has now given the next leg up for the euro, 111.30.45. It is assessed a break beyond this level would see a stretch, and most probably likely to see stop losses trigger a rally up to 111.90 to 112.50. But as mentioned, we do need to see the level of 111.35 to 45 cleared. Wait for the break. Otherwise, if it fails and we do get this overbought condition turning around, then we could see a pullback to 110.80, and a break from there would re-establish the move to 110.30 to 109.55 to 65. So, with the dollar yen remaining dormant as the rest of the global markets move and churn, the fact is that we're still coasting along for at least many handful of days here, around 108.15 to 25, capping. Although we did get a challenge to the downside on Friday at 107.25, but was rejected. But nevertheless, the market is still holding to a potential bearish phase, and I do expect to see this level break and move lower to the bottom side of the range around 106 and reassess from there. Sterling is now pushing back to the top side of the range, although I am neutral, is that we are taking on the level of 124.25. If we see a break here, that would see an extension to 124.80.85 and then review as we could see a reversal. But wait for the break at 124.25. With an explosive economic data week, we still got many events to look forward to. Those being the RBA, of course, mentioned earlier, and along with that, we've got the Australian GDP, China's Asian Services PMI, along with that, ISM Manufacturing PMI and non-manufacturing PMI. We've got Bank of Canada rate decision. We also got the ECB rate decision and also the US job numbers, which sees a potential decline from the previous month for the non-farm payrolls. So let's see how that all starts to pan out. So do adjust accordingly to your risk management in terms of trading, as it's going to be a very volatile week. Dollar CAD remains to a bearish stance and now posts a fresh 2.5 month low. And from that, I do expect to see further risks and look to that target that I'm viewing since the break of 138.5 to 136. Figure 45 and reassess from there. The gold outlook is trekking slightly firmer due to the geopolitical tensions between US and China. The market is reversed and reverted more to the point from that 1,700 level and now looking back towards the top side. And with a close above 1,725 has reinstated the upside to 1,750 to 1,760 to 66. Also being the 8-year high and reassess from there. Finishing up with the oil. Well, unfortunately, we didn't get the confirmation from the hanging man of the break of 30.60, and instead, the last 2.5 days has been bullish. With the dips remaining shallow, we are nearly at the target of $36 a barrel. I do anticipate that we could even see a stretch up towards 41 as this pattern continues. Although there is no trend and there is somewhat divergence, it might be a short-lived an affair, and therefore do be on your guard of possible rejections in the coming days. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And hope you enjoy the great start to the day and to this new week.